What is good stuff, family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why tomorrow is going to be an absolutely massive day for the overall stock market because we do have some new unemployment data coming out, and this will affect every single stock out there and also Tesla. I'm also going to break down what the newest data and technicals are telling us about the markets and also for Tesla, and how this may affect Tesla's share price for tomorrow. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things real quick. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks. And 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 3 weeks. Make sure you check it out before they run out. With that out of the way, let's get on with the video. Tesla was down almost 5% for the day, closing at $172.92 a share, breaking below the major support at 180. Now, after that happened, once again, Tesla did end up showing major signs of weakness, and we are still seeing the odds favor the bears. Now, what actually happened today, though, with the overall market? Because I did tell you guys in my video from yesterday, we could see the market bounce a bit. And I wasn't necessarily wrong entirely. I was correct that the market could get a bounce, but I thought this bounce would actually last and the market would actually hold up a lot better. The market ended up failing, and the bounce ended up actually being a big bull trap, and that actually ended up leading to a big sell-off, and this did impact Tesla. Now, for Tesla, I told you that Tesla would likely hit about 185 a share if we got the bounce. That's where Tesla went to, but we actually failed from there. And right as we failed, I actually noticed this in real time, so I ended up uploading a video about that in real time to warn everyone, just in case you may have actually gotten tricked. I told you all that we had some very bearish signals on Tesla, and we'd likely see a bearish continuation. Now, even though that ended up happening, it's not necessarily like the end of the world. And I say that because of the fact that there is big data coming out, and the market is going to be reactive to that. All right. So could the market just like crash tomorrow and crash super hard? It's possible, but it's going to depend heavily on data as well. To start us off, when it comes to SPY, the options chain was adjusted thanks to the 0-day to expiration options, and Max Pain did adjust from 400 to 399. The put to call ratio ended up actually dropping significantly as we saw lots of calls being bought for today and tomorrow. This is because of the fact that the market was pushing up and the algos were buying us up in the very beginning. That, however, was a massive trap, because as lots of calls were being bought, all of a sudden we got smacked again, and that's despite the high put to call ratio we have for tomorrow. Now, I'm not necessarily paying way too much attention to Max Pain right now because we're well below it. And I'd be very surprised if we actually get close to this for tomorrow by close. Instead, it looks like the market is showing lots of signs of weakness. Why is that? A lot of it has to do with market makers potentially hedging over the next amount of calls being bought. That could be playing a big role, because when the market makers did see more call buying, they ended up actually bringing the market down to hurt them. And then they also started to hedge because we may have gotten lots of put buying at the same time. When the market makers hedge because of this, they end up selling a lot of these shares, and this all happens intraday, leading to a massive sell-off. On top of that, this led to a very big cycle that started with the big banks. The news came out that JP Morgan and many other banks were just crashing today very hard. And this happened to happen because of the fact that the market was anticipating more tightening of financial services, more tightening of financial systems, and also because of the fact that there were concerns over the rising rates and also the short-term yields going up in a much faster manner. So all of this was causing the banks to start actually dropping. And when this happened, the market started to follow as time went on. On top of that, we also have some very big data coming out, and there's a saying that goes like, someone always knows. Now, I'm not like trying to bring up any conspiracies. I'm also not trying to suggest anything about tomorrow's data in a way where I know what's going to happen. I don't truly know what's going to happen tomorrow, right? I don't know what the data is going to tell us. That's why you have to be very prepared. But we do have some red flags involving the data. And that's because of the fact that we saw a lot of jobs actually still being filled, and we did not see unemployment actually go up too much or like to the same extent we probably would have wanted it to be. So for tomorrow, 1 hour before the market opens, we have non-farm payrolls. The market wants this to actually be low. We want less jobs being filled. Then for the unemployment rate, we want this to be high. We want high unemployment. Why is this? Because of the Fed. The Fed is the main person right here, the main entity, because of the fact that Jerome Powell told us that if the jobs market is way too strong, the Fed is going to be incentivized to tighten even more. The Fed, in essence, is trying to bring down inflation. And to bring down inflation, the Fed has to cause pain for the jobs market. In doing so, this is going to lead unemployment to start going up. This is actually something talked about by many economists, and this is inevitable at this point. The Fed needs to actually cause consumers to shift their spending in a way where they start saving more and they stop spending so much. We saw the markets reach all-time highs in credit card debt for the month of February. Spending is still relatively high, and that in turn may lead to hot inflationary numbers again. That's why Powell was being quite hawkish. Now, for the data so far, and I'm not trying to say that this data is 100% accurate or I fully trust it, but we actually had a lot of part-time jobs being filled for the month of January by 517,000. And that was actually some very, very bad news for us, in my opinion. I know it's good that people are getting jobs, but it's also bad because it means that the crash, the rug pull, the landing will likely have to be even harder to actually cause pain in this economy. The economy is taking a very long time to actually contract, and we have to be very patient because of that. Now, for February, I actually have some initial jobless claims numbers right here. Notice how for January, it was actually going down by the second week. Second week, it was going down and going down. And then for January, as less people were filing for unemployment, we also got less initial jobless claims. We also saw a high amount of jobs that ended up getting filled. Now, for the month of February, to start off the month, it ended up going up just a little bit, but then we saw a bit of a decline again and again and again. And the latest one that just came out, or I'd say the one before the one that just came out, was very, very low for the last week of February. We did see some very, very low numbers. So by the time February ended, we actually got the first week of March that came out. This did start to go up, and this tells me that unemployment might start going up for March, but the data is not coming out for March. The data is coming out for February. And so far, the data suggests that we may actually get a relatively low unemployment rate again. Unfortunately, not what I want to see. It's likely going to be very close to expectations, if not just as low or even lower, which is not what we want. What else is not that good is the consensus for non-farm payrolls is 205,000 or around there. We want this to be relatively low. It might actually be kind of hot because of what I just showed you. So be very careful. This could be part of the reason why the market is selling off. Maybe fear has a big part of it too, but it may not just be fear. It could also be because someone knows something, like I was saying earlier. But now, when it comes to Tesla, we do have some not so good news and other good pieces of news. The not so good news is the fact that the Tesla Model Y is now under the NHTSA investigation over the steering wheels potentially falling off. Now, this is not necessarily confirmed as of right now that this is truly happening to all Teslas or anything like that. They're just under investigation because of some speculation and also some complaints and reports that just came out. Now, once again, this needs time. We have to wait for this to actually come out before drawing a conclusion, which is why I said this is not like insanely horrible news. But once this comes out, everything could actually change. Now, the good news for Tesla investors is the fact that Cathie Wood has bought another $12.6 million piece of Tesla. Once again, buying into Tesla's absolutely fantastic for her, but that does not guarantee that Tesla's just gonna like start rallying to the moon after this happens. She's simply buying the dips. She could also be hedging for different events. All right, so be very, very cautious when you see headlines like this. Don't just FOMO into a stock over someone buying it. You have to look at the overall trends, the macros, the fundamentals, and etc. before making any decisions like that. And that's not financial advice, by the way. When it comes to the new Tesla Model Y inventory levels, once again, they're relatively low, so Tesla still has high demand, but my only question is how much or how long will this last, given the fact that we're getting closer to a recession, right? I'm still, once again, still going to be very optimistic, but simultaneously pragmatic despite that. All right, so yes, there's high demand for Teslas. That's good news, but let's just see how this lasts over the next couple of months as we're getting closer to a recession. Now, when it comes to Tesla's volume, we had relatively low volume. It's actually not that bad, and we did drop on pretty okay volume, which is not the best of signs. And on top of that, the short volume percentage is now on a bit of an uptrend. This tells me, once again, shorting is likely going to increase for Tesla and selling pressure is getting stronger. The price price ratio is likely going to start declining. See this downtrend that's starting? This tells me that Tesla's relative strength is going down. It's getting weaker and weaker as the days go on. Many analysts are just saying hold to Tesla instead of buying Tesla. And Fridays tend to be green only about 48% of the time, so the odds are not in Tesla's favor historically. And finally, as far as the short interest goes, we did see a bit of a spike. We actually saw about 18 million Tesla shares shorted on the 6th of March. This went up finally just 2 days ago to about 24 million. So that's over a almost I think a almost 6 million amount of shares that were shorted in just the last couple of days. So shorts are starting to pile in again into Tesla. That's why the short volume percentage is also shifting. So what does this all mean for Tesla's share price going forward? Well, in my opinion, we do have a nice downtrend that's being respected, and now it's getting harder for Tesla to get those bounces. Tesla tried, it really wanted to bounce today. I wanted to go for this gap fill and actually failed to do that. And because of that, it's going to become a lot more difficult for Tesla to get a nice rebound. If Tesla does try to rebound, I don't expect it to run way too much. It looks very, very weak right now. And now more eyes are going to be on the downside based off what we're seeing right now from the markets. JP Morgan was taking a very, very big hit today. Once again, it's down over 5% because of the fact that the yields are continuing to rise at a staggering rate. Once again, signaling a potential recession to come very soon. Now, are we in a recession? It's very possible, right? But I can't necessarily make the claim until we have data to back it up, at least from the eyes of many economists. We don't have 2 consecutive negative GDP quarters just yet, and we're still waiting for unemployment to start going up. Remember, the jobs market has still been very strong, and that's why the Fed is becoming more aggressive. They have to tighten even more. Once we start to see unemployment go up, the recessionary talks are going to become more dire, and they're going to start affecting the market even more as sentiment starts to shift. Now, for SPY, I just want to note that we held 390. We could even try to bounce. In order for us to bounce just a tiny bit, that's going to depend on the data coming out. If unemployment went up pretty hard, yes, that could happen. But overall, I'm not really counting on this to bounce way too much. The overall trend is looking way more bearish now that we actually broke the low we made previously. And also because of the fact that CPI is coming out, and if the jobs numbers are relatively strong, this would tell me that CPI might be strong as well. CPI might be hot again. Once again, very bearish for the stock market as financial conditions start to tighten. I also believe that the credit markets might actually start to see some difficulty soon because millions of Americans are just borrowing money. They're borrowing money to start, living their daily lives, paying for daily expenditures. When people keep borrowing so much money during times like these, it basically tells us that wages are not keeping up with inflation. And because of that, because Americans are losing so much spending power, they're borrowing more money, and it's going to become very difficult for them when they get very close to the stage of having to pay off the debt. That's what's very concerning about this economy to me. Now, what I'm seeing for SPY is, yes, this thing, we have a very bearish looking candle for the daily. We will react to the data, but the odds are favoring that whether we get a small bounce, it's going to be very small, and we're eventually, whether it happens tomorrow, whether it happens, next week, we're eventually going to break down very hard. If the data that comes out tomorrow is very, very bad, meaning that the jobs that were filled went up and we actually saw unemployment relatively low, the market could crash very hard. It's going to be very bloody if we get very bad data tomorrow. All right, I'm going to keep using the words bad data. I'm just referring to what I just said. So I'm going to keep repeating that. But if we get bad data, man, SPY is going to crash very hard. I'm going to be watching the high 180s. If 187.5 does not hold, man, this thing could go all the way down to the mid 180s, if not the low 180s in just one day. It could crash very hard, and the 0-day to expiration options could play a big role in it because as lots of people start to buy puts again and again and again, the market makers would likely start to hedge. just because of the fact that they have to mitigate their risks. They start to hedge by selling more shares, thus bringing the market down. And this selling pressure is almost translated in a massive algorithm that moves the entire stock market. That's what's very interesting. Notice how the whole market is almost moving in unison. Apple's looking pretty weak. Apple's at a very critical level. If Apple ends up getting dragged down tomorrow by bad data, Apple's going to come all the way down to fill this gap. It's going to crash again. And if that happens, man, SPY is going to come down pretty hard. So is the QQQ. This is likely going to have a negative effect on Tesla. The whole market's going to run in unison. For Google, it could try to bounce, try to get back to 95 or so. But if it fails, we have not only, I think we filled the gap, but Google has a lot of room to come all the way down to 88. That's the major demand zone. Google has lots of room for downside. That's not good for the markets. For the IWM or the Russell 2000, it actually ended up closing very close to where the 0.618 retracement is. If that fails, you have to watch for 176 if it does end up dropping tomorrow on the data. If it does bounce, watch 184. But once again, the odds are favoring more downside. Meta is a very good short in my opinion. On the hourly time frame, we have a massive, massive gap. It hasn't even filled just yet. And I do believe Meta is going to come all the way down to fill this gap around this 174 level. If it fails at 177, which is the 0.382, it's most likely going to fail there. So we are going to likely see some downside. For the triple Q, what am I essentially seeing? The triple Q could try to bounce and might try to bounce off 290 or so if it wants. I don't count on it doing too much though. Like I said before, bad data could drag this thing very, very low if we end up getting that. If it does bounce, I don't count on it being too big because of the fact that CPI is still coming out. The Fed is still going to become more hawkish. They're most likely going to give us 50 basis points at this point. The market is pricing that in. And the QQQ looks like it's going to retest 288 or maybe go lower. Once again, it's going to be correlated with Tesla and Apple and many other stocks coming down. NEO looking pretty bearish to me. This thing did end up breaking below key demand zone between 9 and 9.13. If it fails at 8.7-ish around this zone, it's going to come all the way down to 8.33 or the low 8s. The dollar is continuing, okay? Even though it's trading kind of sideways here because it has some resistance between 105 and 106, it's on a very strong uptrend still. The uptrend is still more on the bullish side. Once again, this was signaling to us we had some bearish signals for the markets, and now they're starting to play out most likely. So I believe the dollar is most likely going to start consolidating a bit, maybe start pushing up even more. As it does that, it's going to be bearish for the stock market. The dollar also very recently, I think 2 days ago, it actually broke its high. No, this was actually yesterday. It made a new high yesterday. So the dollar is still making higher highs. Once again, very bearish for us and showing us signs that inflation is likely still going to be going up. Once again, that's what the dollar is telling us. And the VIX, as a result of how the stock market performed, the VIX got dragged up to about 22.6. That's once again looking pretty bullish now. We did get a crossover to the downside as the market got the bounce. I did mention this, but now it got another crossover on the daily MACD PPO, and now it's gaining lots of strength. It looks to me like the VIX is going to slowly uptrend. If we are ready to crash in the markets, this thing is going to start flying like crazy. It's just going to need some time, but I really believe we're very close to seeing something like that. Notice how we got a nice technical breakout out of the falling wedge. We came all the way down to almost test the wedge, coming very close to support. Nice bounce off that. Once again, it's a textbook breakout. The VIX might continue to keep going, most likely will. Once again, being correlated by the market coming down. Finally, the SQQQ looking pretty bullish. I do believe it's going to keep going for that 41 level. Might just keep going from there. And last but not least, the 10-year Treasury yield. This thing has a gap above. It might try to bounce off 39 and start filling this gap around the 40 very soon. If that happens, it's going to be bearish for the stock market and not good for the banks out there, which are starting to react to these yields. Last but not least, let's talk about Tesla, okay? I know I went over a lot of stuff. I'm trying to do this quickly. For Tesla, if Tesla wants to bounce, let's look at the hourly chart first. If it wants to bounce, we're going to have some heavy resistance at this trend line. This trend line is now around the very low 180s. That tells me Tesla's looking very weak. It's making lower lows and lower highs. All right. So I'm not counting on a bounce. It really depends on the data though, right? But what's most likely going to happen is Tesla's going to likely continue to break down. Now, the very important zone to watch is 170 to 173, this level right around here. If Tesla fails at 170, it has to hold 166.65 or around that zone. It has to hold that because if it fails at 166, there's actually a gap around 160. I would expect Tesla to actually fill the gap and come all the way down to fill the gap at 160. I expect that to happen if it fails at this like 166 to 165 zone. And if it comes down to fill this gap, man, Tesla's going to come very, very close to the 150s, the high 150s to 160 zone. So once again, looking pretty darn bearish. It will depend on the data. I really believe that the data is actually going to be giving us some insights about what CPI is going to look like. The data tomorrow is not everything, but it's going to be looked at together with CPI. That's what makes it very important for the Fed's perspective. What am I predicting for tomorrow? I don't really know, but in my opinion, if I could give you guys just my guess, hold on. My guess is that the non-farm payrolls is going to be a little bit hot, but then unemployment is going to be as expected. And I think this might actually cause more downside. I also believe there's a possibility the market is selling off very hard, not just because of fear over the data that's coming out, but maybe because someone knows something. Maybe, just maybe. So for Tesla, resistance is going to be at around 175, around almost 175. Then we have the 178, 177.5 zone. Then we have 180, the 183 zone, 185. I really don't see Tesla testing too many of those. If it does try to rebound, watch the mid 170s. I don't really see it doing too much when it comes to rebounding. It's more likely to either like rebound a little bit, then start dropping, or it just tanks from here because the data is coming out before the market opens. All right, so the odds are favoring downside. No matter what, even if Tesla tries to bounce just a tiny bit, it's most likely going to get eaten up and start coming all the way down to about 170. If 170 fails, like I said before, it's going to likely retest 166. If that does not hold, which I think it most likely won't if we do come that low, Tesla will most likely get dragged all the way down thanks to shorting, thanks to manipulation, thanks to selling pressure and capitulation, and all these factors. I believe all of that's going to drag Tesla all the way down to 160 flats to fill the gap and maybe even the high 150s. I know it's unfortunate. I know you don't want to hear that, but that is what I'm essentially seeing when it comes to levels. On the daily, this is how Tesla's looking. It looks very distributive in my opinion, right? It looks pretty bearish. You can see we're kind of curling like this. We have a Wyckoff distribution schematic playing out. Downside seems very, very imminent. And we have this massive gap in the 140s. We could ultimately get there over the next couple of weeks. I understand how you're feeling, but I just want to show you what the technicals are telling us and why you should be very, very cautious. PPO on Tesla, the PPO of the MACD is looking quite bearish. Bearish momentum is getting stronger. Once again, guys, be very, very cautious during times like this. Get ready for tomorrow. It's a big day. And with that said, thank you all so much for listening. Tesla to the moon. I still say that because for the long term, I'm still super, super bullish on Tesla. I think Tesla's going to break all-time highs in the super long term. It may take a while, though. It may take over a year to get there. But it's okay because I'm seeing these dips as very, very good buying opportunities. And I'm dollar cost averaging down as it drops. Not financial advice, by the way. Thank you and peace out.